you may be aware, the Board of Education for the Central Catskill School District is considering the acquisition of several minibuses to use for transporting students to school. Currently, 5 of the school district's bus routes are underpopulated, meaning the full-size buses on those routes are not being fully utilized. After a careful study, the board has decided that it is not feasible to consolidate these routes into fewer routes served by full-size buses. The area in which the students live is too large for this approach, since the bus ride for some students would then exceed the state maximum of 45 minutes. The plan under consideration by the board is to replace 5 full-size buses with 8 minibuses, each of which would cover a much shorter route than a full-size bus. As you can see here, the bus drivers in this rural school district are part-time employees whose compensation costs the school district $18,000 per year for each driver. In addition to the driver's compensation, the annual cost of operating and maintaining a full-size bus amounts to $50,000. In contrast, the board projects that a minibus will cost only $20,000 annually to operate and maintain. A minibus driver earns the same wages as a full-size bus driver. The school district controller has estimated that it will initially cost the district $15,250 to redesign its bus routes, fully inform the public, install caution signs in certain hazardous locations, and retrain its drivers. A minibus costs $27,000, whereas a full-size bus costs $90,000. Also, the school district uses straight-line depreciation for all of its long-lived assets. The board has 2 options then regarding the 5 full-size buses. As you can see, first, the buses could be sold now for $15,000 each. Second, the buses could be kept in reserve to use for field trips and out-of-town athletic events, and to use as backup vehicles when buses break down. Currently, the board charters buses from a private company for these purposes. The annual cost of chartering buses amounts to $30,000. The school district controller has estimated that this cost could be cut to $5,000 per year if the 5 buses were kept in reserve. The 5 full-size buses have 5 years of useful life remaining, either as regularly scheduled buses or as reserve buses. The useful life of a new minibus is projected to be 5 years also. Central Catskill School District uses a hurdle rate of 12% in all capital projects. This then leads to a decision problem for the Board of Education. It has 2 main alternatives. The first alternative is to continue to use the 5 full-size buses with the regular routes. The second alternative is to buy 8 minibuses to cover the regular bus routes. The alternative of buying 8 minibuses has 2 options embedded within it. The first option is to sell the 5 full-size buses. The second option is to keep the 5 full-size buses in reserve to use for field trips, out-of-town athletic events, and to use as backup vehicles. So as you can imagine, a decision ultimately needs to be made as to what they should do. To further discuss and explain the current scenario, I was able to talk with Comey, Marcos, and Naga, who are all members from the Board of Education. Here's what they had to say.
Well, if we choose to buy the minibuses, we need to analyze the net present value for the 2 options for the 5 full-size buses. Net present value is the difference between the present value of cash inflows and the present value of the cash outflows, and it is used in capital budgeting to analyze the profitability of an investment or project. So, net present value analysis of option for full-size buses. Sell 5 full-size buses. The board has 2 options here. As a first option, the buses need to be sold at $15,000 each. So the sales proceeds at 15,000 times 5, that is $75,000. So in this case, no discount is needed. And part B, that is annual savings on buses charter fees, is annual cost of chartering buses amounts to $30,000. According to another school district controller's estimation, the cost could be cut to $5,000 in case of keeping the buses in reserve. So now we have 30,000 minus 5,000, that is $25,000. and annuity discount factors at the rate of 12%, that is 0.12, and number of buses n is equal to 5. And for that we have the value in the table 4, which is at the end of chapter 16 appendix, that is 3.605 for 12% and period 4. So from that we got the value as 3.605 times 25,000, that is $90,125. So here NPV is greater in this case. As a result, full-size buses should be reserved. Now that we know that the best option is to keep the full-size buses in reserve, we now need to analyze the net present value of the minibus purchase decision, which is as follows. So now coming to the fourth question, that is, we know that the best option is to keep the full-size buses in reserve. So now we need to analyze the net present value of minibuses purchase decision using this problem. First of all, net present analysis of minibus purchase decision, that is incremental cost analysis, cash flow in parenthesis. Incremental annual cost of compensation for bus drivers if minibuses are used. Therefore, minibuses needed are 3, and unity compensation cost for each bus is $18,000. So 3 times $18,000 is the total cost is $54,000, and the incremental annual maintenance and operation cost if minibuses are used is, for this minibus unity cost is $20,000, and the number of minibuses needed is 8. This is from the problem, and total minibus buses cost is 20,000 times 8, that is $1,60,000. And now full-size unity cost is $50,000, and number of full-size buses are 5, and total full-size buses cost would be 50,000 times 5, that is $250,000. And now incurring annual maintenance and operation cost is calculated by using full-size buses cost minus or subtracted by minibuses cost. That is, we will be subtracting full-size buses cost and from minibuses cost. That is, now we will get $250,000 minus $160,000 from the above solved one, and from that we will get $90,000. So now incremental annual cash flow which favors minibuses would be $90,000 minus $54,000. That would come up to $36,000. And now annuity discount factors here are again as the same in the problem above. The rate at which it is 12%, that is 0.12, and number of buses are 5, that is n is equal to 5. And so as mentioned in the above problem, from the table at the end of the chapter 16 we get the value as 3.605 for 12% and period 5. And now present value of incremental annual cash flow is calculated by using 36,000 times 3.605, and that is 129,780. From the given data in the problem, cost of redesigning bus routes, retaining drivers, etc. is given as $15,000 and $250. And now acquisition cost of mini buses for the given data of the problem, that is cost per unit is 27,000 times number of buses is 8 buses, that is 27,000 times 8 is equal to $2,16,000. And now Coming to the present value of savings on buses charter fees, if minibuses were purchased, from problem 3 we obtained $90,125. That is from the problem 3, we can see here, from here, and now from that, therefore net present value can be calculated as minibuses cost per unit minus present value of incremental annual cash flow plus cost of redesigning bus routes minus present value of saving on buses if minibuses were purchased. All these values we got from the above calculations. That is, so now net present value would be $2,60,000 minus $1,29,780 plus $15,250 minus $90,250. So now we got the net present value as $11,345. This net present value would be $11,345. Based on this result, it is best that the minibuses should not be purchased at this value, as the value of $11,345 is very less than the full-size buses expenses.
In addition to finding the net present value, the internal rate of return for the minibus acquisition also needs to be analyzed, which is the discount rate often used in capital budgeting that makes the net present value of all cash flows from a particular project equal to 0.
To calculate the internal rate of return, we first need to calculate the annual cost savings for the project of new minibuses acquisition. We already know that the full-size buses will be kept in reserve. So, we have that the annual savings on the bus charter fees is $25,000, amount that we got from subtracting the cost of chartering buses, that is $30,000, minus the annual cost of using the buses in reserve, that is $5,000. The annual operating and maintenance cost for minibuses is $160,000. On the other hand, the same cost for the full-size buses is $250,000. So, as we can see, we got a saving of $90,000 on operating and maintenance costs. With the acquisition of 8 minibuses, we need 3 more bus drivers. So we have a cost per year for the 3 bus drivers of $54,000. As a result of adding and subtracting these amounts, we have a total annual cost savings of $61,000. Now, we have to calculate the initial cost for minibus acquisition. We have a cost of $15,250 for redesigning the new routes, retraining drivers, etc., plus the cost of the new minibuses, that is $27,000 each one. We got $216,000. So the total initial cost is $231,250. In order to know the internal rate of return, we need to get the annuity discount factor associated with the internal rate of return. That is the initial cost that we have $231,250 over the annual cost of savings that we have $61,000. As a result, we got 3.791 rounded. The last step is to find the 3.791 of the annuity discount factor in the period row of the table 4. Because of the project is for 5 years, we're gonna select the 5th row and we're gonna look for the value. And as we can see, it lies in the 10% column. So the internal rate of return on the minibuses acquisition project is 10%, and the hurdle rate on capital project from the school district is 12%. Therefore, the project should be rejected. Remember that the higher a project's internal rate of return, the more desirable it is to undertake the project.
So a lot of information was reviewed and analyzed, and to talk to us more about this, I was able to get some input from Comey.
Yes, Regina, you are right. A lot of information has been reviewed, some of which unfortunately has been irrelevant. For example, the cost of buying a full-size bus at $90,000. I think this is irrelevant because the purchasing of any full-size bus is not the issue being looked at. Plus, the information about how the district used straight-line depreciations is also irrelevant because depreciation is not a cash flow, but net present value and the internal rate of return method are centered on cash flow.
After my interview with Comey, some interesting footage was discovered of Michael Jeffries, who is the business manager for the Central Catskill School District, and Peter Reynolds, the former vice president for a local car dealership. Let's take a look.
So it's been a while. How's work going over at the school district?
Well, we actually have some tough decisions to make at the district right now. We're actually considering an acquisition of several minibuses. And I'm actually thinking about to recommend to the board next week that we do not buy them.
Interestingly enough, the footage broke up a bit here, but what appears to be the end of the conversation was still caught on camera. Let's take a look.
Well, Michael, we go way back. I know you aren't paid well at the district, and our top financial person is actually retiring next year. How would you like to come work at the dealership?
You know, that's pretty tempting, Peter. Let me think it over.
Sure, Michael, take all the time you want. In the meantime, how about rethinking the minibus decision? It's no big deal to you, and I could sure use the business.
But Peter, I told you what the figures say about that.
Come on, Michael, what are friends for, man?
Well, to say we were shocked when we saw this footage is unbelievable.
Absolutely. There are just so many ethical issues here.
To start, Peter Reynolds is not properly doing business. He's trying to persuade Michael Jefferson's decision, which based on all of our analysis should be refused. Peter should not try to lure Michael to change his decision by offering him a higher paying position in order to win the business of the minibuses, especially when those minibuses are not needed.
Plus, Peter seems to not even be in a position to offer a job since he was the former vice president of SEL.
Then, when it actually comes to the point of when does financial position become available, a first search should be done to find the most qualified candidate.
So, Michael should not change his recommendation to the school board, and Peter should not try to influence him just because of their friendship.
So as we just saw, Comey, Marco, and Naga are not happy. It seems like the decision of not buying the minibuses is the wisest choice. The Board of Education meeting is set for tomorrow evening, so we will keep you informed on what the final decision is. Now, we are interested in learning what our viewers think.